Happy Tuesday, everybody. Good morning, all you wonderful melon heads out there. Today is Tuesday, June 13th, 2023. This is my second live stream of the morning already because we had CPI came out this morning. And if you didn't catch my live stream from an hour ago, well, CPI came in at 4.0% headline year over year. That is a bullseye, exactly what the market was expecting. So I don't think CPI is really going to move markets bigly in one direction or another today. That's not to say markets won't probably go up because, well, that's all markets ever seem to do today, right up until they don't. But for now, number go up. And I saw this story yesterday, it was late yesterday, about this California train bailout. We're going to talk about this one this morning. And folks, this is just the most California story ever. What do you do when you have got this work from home phenomenon where people are no longer commuting because they can do their jobs from home and because your cities are slums and decrepit and urban decay is running amok and they won't prosecute criminals, they'll just turn them loose the next day so they can commit more crimes? Well, people aren't going to these cities anymore, so people aren't riding on their trains. So what do? Do you shut down trains that nobody rides on? Of course not, silly rabbit. No. You borrow more money to keep empty trains running to take nobody to buildings that nobody works in, for the climate, to save the planet. That's California, folks. That is, if you live in California, that is your leadership in action. And look, folks, if you live in California and you're a small business owner, you're paying for this because they're going to pay for it by raising taxes on businesses. If you still live in California and you're still trying to run a business there, I got news for you. Your state government hates you. What are you doing there, guys? What are you doing? What is the light? Is there a light at the end of the tunnel? Let me know. Do we have any small business owners in California watching this channel? What do you think is around the corner that things are going to get better? I would legitimately like to know. I haven't been to California in a long time, so all I know about it is what I read in the news. What I read in the news is pretty terrible. But that's just the most California thing I've ever read. Elsewhere, we've got cardboard box shipments continue to plunge. I did a video about this a few weeks ago that, hey, guys, cardboard is used in virtually every point in the supply chain. It ships, almost everything ships in cardboard, and we're using a lot less cardboard. This is another good indicator that the consumer economy is slowing very quickly. You can see the same thing in the oil data. I've been talking a lot about that. Despite a production cut from Saudi Arabia, oil prices continue to fall. They were up a little bit this morning at one point, but they've been falling pretty much nonstop since the OPEC oil production cut. Less oil, less cardboard. Nobody riding the trains in California. Guys, the economy is slowing. I get it. NVIDIA, I get it. AI, and Jim Cramer said whatever Jim Cramer says, I get it. But you've got the stock market and then you've got economic reality. And those two cannot stay divorced from each other for long. But I would just add that markets can stay irrational longer than you can stay solvent. So be careful out there, guys. And GameStop has new life this morning. GameStop, I always say GameStop. It's this verbal thing. It's really hard to say GameStop. GameStop stock is rallying this morning on news that directors are buying shares and new executive chairman Ryan Cohen is also buying shares. Now, GameStop was crushed last week when they fired their CEO and canceled their earnings call because a lot of these new business decisions that GameStop has been attempting to make, these pivots, they're just not working. It's not translating into cash flow. They've done a very good job of eliminating or reducing their overhead and cost cuts, but they're yet to revitalize the cash flow of the business. And ultimately, the goal is to make money here. I get this story about the naked shorts and everything. So GameStop was just crushed last week on that news. Now it's gained back a lot of those losses. Not quite all of them yet, but it's pretty close because insiders buying is generally a very good indicator. That means they believe in the business turnaround and they have access to all the numbers that we don't have access to. So maybe that means that the story's not over at GameStop. Only time will tell. With that, I got to say thank you very much to Patriot Gold, the sponsor of today's live stream. Guys, we're going to talk about governments borrowing money to fund trains that aren't needed, that nobody rides on. You know what? You can leave your money in the traditional finance system and you can trust people who make decisions like that they have your best interests in mind and that they're going to take care of you. Or you can do what I do And what a lot of other people do, you can get your wealth out of their system that they are running into the ground, the same way they're running their trains into the ground. And you can own physical precious metals. And a great way to own physical precious metals is to get them from Patriot Gold Group. They are a fantastic gold dealer. Also, they do precious metals backed IRAs. They've been doing that for well over 30 years. It's an absolute fantastic outfit. So go to nsfgold.com or call 888-988-5401. Ask for your free investor guide today. And don't forget to tell them that nobody sent you. And with that, we are going to shrink my big melon of a head. And let's see what's going on in the market this morning. Oh, look, number go up. The S&P 500 up 24 points or a half of 1% at 4,362 points. Blew right through that 4,300 resistance, didn't we? The Dow is up another 100 points this morning, 0.3% at 34,173. And the NASDAQ is up another 100 points for the NASDAQ, 0.76%, 13,563. People still buying tech stocks, folks. Looking at the U.S. dollar, the DXY is down 46 basis points, still between 103 and 104, currently at 103.2 for the U.S. dollar. And looking at bond yields, we have got yields lower across the board today. What's going on in bonds? Looks like markets are loving, or bond markets anyway, are loving those CPI reports, that 4.0 on the headline number. We've got the 10-year yield is down 3 basis points or 1%. The 2-year is down 6 basis points, 1.32% at 4.53, and the 1 month is down 5 basis points, yielding 5.13. Looking over at commodities, we got gold higher this morning, up $5.50 or 0.28% at $1,975. Silver's having a pretty good day after the bludgeoning it got yesterday at $24.20, up 14 cents or a half of 1%. WTI crude finally catching a breather, up $2 this morning at $69.29, still below that $70, still well below the level it was at when OPEC announced that production cut. Elsewhere, we've got natural gas is up 3.6% this morning, about 8 cents at $2.34. And here we go, folks. Most California story ever. California's $3.1 billion transit bailout forces trade-offs. And California, what an amazing growth story this is for California. The fact that the mainstream financial press is admitting that government spending might actually involve trade-offs. That money is not an infinite resource that can be pulled out of thin air or a bird over at the Federal Reserve. Bloomberg is admitting that government spending has limits. This is a wonderful silver lining to this big gray cloud of a train bailout. Finally, somebody's going to admit that resources are finite. Imagine that. Package intended as a lifeline for the state's mass transit system. Governor Newsom is yet to respond to lawmakers' transit proposal. California lawmakers agreed to provide billions of dollars to the state's ailing mass transit system as agencies face continued ridership losses and the expiration of federal pandemic-era subsidies. The package, worth more than $3.1 billion, offers new operating subsidies and infrastructure dollars intended to help prevent severe service cuts that would further hamper the recovery of cities throughout the state. Recovery of cities throughout the state? Hey, any of you San Francisco people watching out there, how's that recovery going? Are you recovering? Because everything I'm reading about San Francisco says they're, I don't know, what's the opposite of recovering? Uncovering? How's the uncovery going in San Francisco? Well, I love how they talk about this as these cities are just falling apart at every level. Literally every aspect of these cities is just crumbling, and they refer to it as the recovery. They're not recovering. These cities are dying. We're sending a clear message that we're not going to let our public transit system crater, said Scott Wiener, who represents San Francisco in the state Senate. This really throws a lifeline to our transit system. Now, this California package comes as the country's largest mass transit system, New York's Metropolitan Transit Authority, also received a bailout to help mitigate the agency's finances. While Governor Kathy Hochul of New York agreed to increase taxes on large businesses, why? Because they hate you. To make up the funding gap, California's Gavin Newsom has been reluctant to raise taxes. Wow. I just stopped dead in my tracks. Did I just read right? California's Gavin Newsom has been reluctant to raise taxes. Mark the date and time, folks. They actually said that. Again, this is really a growth story, isn't it? He has been reluctant to raise taxes as the state faces a $32 billion deficit. Public transit has been kept afloat in recent years by federal pandemic aid that's running out, forcing agencies to seek new subsidies as well as fare hikes. And this story gets even better all the way down here. California transit agencies will be forced to choose between using money for long-term transportation and bus infrastructure or to keep their buses and trains running in the short term. So what they're talking about here is, are we going to have to use capital money, money that's been given us by the federal government, to invest in new trains and new buses, because California just loves trains. How long have we heard about this high-speed rail connecting Los Angeles to San Francisco? Have they even laid 100 feet of track yet? I don't know that they have. I've heard about this since I was a wee lad back in New Jersey in the 1980s. I've heard about this magic maglev train that's going to carry people up and down the coast. It's never going to happen. They're just pumping money into this system. But you know what? That environmental impact review, it should be done any day now after 30 years of study. Wiener said Bay Area transit agencies are reluctant to spend capital dollars on transit operations because they would lose out on matching federal grants that received a big boost from President Joe Biden's infrastructure bill. So they don't want to spend their government borrowed money, because if they spend their government borrowed money on something else, they get more government borrowed money from the federal government. And so they're going to spend this other borrowed government money to keep it running so that they can get more borrowed government money and then get the matching borrow. Oh my God, they just borrow. Just, you know what? Just keep borrowing from the future. I'm sure your kids are going to love you for it, California. It's going to go over really well. History books will write so kindly about this, I'm telling you. He said the state must also consider delaying a mandate that forces bus operators to transition from gas and diesel-powered vehicles to electric and hydrogen-powered ones. You think? How about the fact that there are no electric and hydrogen-powered buses? They just aren't any. So why are you forcing a mandate to transition to these new buses that do not exist? Maybe we should mandate that everybody fly spaceships to work by 2030. That's every bit as grounded in reality as electric and hydrogen-powered buses, because they're not there yet, guys. There's no solution offered on the market. Maybe Tesla's working on one. I don't know, but guys, it don't exist. And also, I'm not comfortable sitting on a big tank full of hydrogen if I'm riding on a bus. I mean, it's bad enough gasoline, like you see. I put out car fires and stuff. I'm a firefighter, and car fires stink, and there's gas fuel leaks, and it could catch fire, and it's messy. Hydrogen doesn't leak and burn. Hydrogen just blows up. All right, I don't want to go to hydrogen fires, please. So that's the most California story ever. But also we got this one: slumping cardboard box sales signal U.S. consumer spending slowdown. I talked about this one a few weeks ago, and shout out to Joe Brown over at Heresy Financial, who was talking about this one yesterday on Twitter. U.S. paper mills are scaling back production as big box retailers buy less cardboard, signaling a slowdown in consumer spending, because cardboard packages pretty much everything. Cardboard boxes are present at nearly every step of a goods journey through the supply chain, which makes the paper industry a key indicator of how consumer demand is faring. The U.S. corrugated products industry is reporting slumping sales, with shipments of empty boxes in March down 11% from a year earlier. That is not a good sign for retail and consumer spending, guys. Integrity Fiber Supply LLC, an Indiana-based paper products maker and recycler, is seeing the shift firsthand. According to one of its commodity traders, Kyle Rissinger, said at last week's Commodity Trading Week America's event in Chicago that manufacturing is down because inflation is curbing consumer spending, hurting demand. There you go, guys. The solution to higher prices is higher prices. When things are good and everything is running solidly, these mills are running at 90 to 92% making paper and packaging. But right now, since the beginning of the year, they're only at about 70% capacity. Bad sign for the consumer economy. And GameStop stock rallies after two directors bought share. This one hit the tape late yesterday. GameStop shares were rebounding Monday after two directors disclosed stock purchases in the wake of last week's skid. Director Larry Cheng of Cheng Capital paid $111,900 for 500 GameStop shares. And also, who was the other one? Director Alan Atoll paid $224,000 for 10,000 GameStop shares. So we got two directors, insiders, buying GameStop after the bludgeoning it got last week. And then this morning, I saw this one from Walter Bloomberg on Twitter. It says Chairman Cohen buys 443,000 shares of GameStop. So guys, insiders are gobbling up shares of GameStop. So maybe it's not the end of the road for this company. I mean, GameStop has had a rough go of it since the squeeze in 2021. And they got absolutely crushed yesterday. But look at the insiders gobbling up shares. And you can see it in the stock price right now. GameStop today up another 8%. And that's after it was up almost 8% yesterday. Checking out a 1 month chart here. Let's see how we doing. And we have now recovered. There it is, guys. GameStop is now higher than it was before that earnings release. So they gained back all their losses from last week and then some on the insider buying. So congratulations to you apes out there. I mentioned in my stream a few days ago that apes just couldn't catch a break. Apes, here is your break. GameStop rallying 8.25% today alone on this news of the insiders buying. And I have to say thank you so much to Mr. Nashville Pasta Man, who says my daily dose of optimism, the forgotten man. Sorry, Pasta, I don't do optimism. Jack, you know, it's right here, guys. I say it every day, almost every day. Permabull, written right there on my sleeve in invisible ink. I own it. I get it. I am mostly negative. Why? Well, that's pretty much empirical data. That's why. I'm not just negative because negativity. I actually consume vast amounts of economic data, and I look at charts all day long, and I read articles all day long, and I make up my own mind. I don't just tune into CNBC and get my opinion from Jim Cramer and then regurgitate it. Kevin. Sorry, guys. That's not what I do here. I actually look at the numbers and look at the data. And right now, the economic reality, the macroeconomic picture is 100% divorced from the valuations in the stock market. The S&P 7 is up massively this year, even though the S&P 493 is just barely positive for the year. You got 7 companies who said AI enough times that their stocks are just rallying to the moon and back. It's not based on reality. It's based on just unbridled hope that maybe this software that they're cranking out is going to be so amazing that it revolutionizes everything, and these companies just suddenly start making trillions of dollars. I'll believe it when I see it. The tech is cool. I've used ChatGPT. I'm optimistic about it, but I don't think it's so awesome that it's going to overwhelm all the negative stories out there about debt, about rising interest rate, about commercial real estate going belly up, about auto loans going belly up, about the consumer who is running out of money. You name it, all the macro stories, less oil consumption, the slowdown in China. Stories are out there, guys. That's why Jack is a perma bear. Maybe one day I will be optimistic, Nashville Pasta Man, but today is not that day. Thank you very much, sir, for the super chat and the support of the channel. Thank you to Patriot Gold for sponsoring this live stream. Thank you to all my Patreon supporters for everything you guys do to support the channel. Hi, Mom. Hi, Dad. I love you guys. And until next time, live small and dream big.